After years of India's e-commerce story being shaped by a handful of big platforms, a completely different kind of app built for everyday shoppers and not premium ones is now heading for one of most closely watched listings of the year. And that app is Meesho. Meesho's 5,421 crore rupee IPO has opened on 3rd of December for subscription with a fixed price band of 105 to 111 rupees per share, a lot size of 135 shares with a minimum of 14,985 rupees for retail, a grey market premium of 47 to 49 rupees, implying a 39% to 44% listing gains, potentially of 160 rupees. This isn't just another tech listing. It's a test of whether value e-commerce built for smaller towns, budget-first families, and the next 500 million Indian internet users can survive harsh scrutiny of public markets. So today, let's break down why Meesho's IPO really matters, how it grew this fast, and what are the numbers looking like for Meesho. And the big question investors are now asking, can Meesho stay affordable and still make money? Meesho is a horizontal, asset-light marketplace connecting small manufacturers, regional sellers, and home-based entrepreneurs to buyers, especially in Tier 2 cities and Tier 3 markets that have historically been underserved by mainstream e-commerce platforms. Crucially, unlike traditional e-commerce, Meesho does not buy or store inventory. It's a marketplace engine. Sellers list items, the platform aggregates demand, and Meesho earns from logistics, ads, and seller services. In logistics arm, Valmo, along with partner delivery networks, is rapidly expanding its reach, including hard-to-serve and remote PIN codes that traditionally platforms often skip. Remember, Meesho was founded in 2015 by IIT Delhi alumni Vidit Atre and Sanjeev Barnwal, now CEO and CTO. Backed by Prosus, SoftBank, and Peak 15 and others, Meesho is shifting from VC-funded hypergrowth to public market discipline. Anchors like BlackRock, Fidelity, Goldman Sachs, and SBI mutual funds subscribed about 32 times the quota, raising 2,440 crore rupees. In fact, Vidit Atre explains that Meesho's mission as an app designed so that anyone in India can start and grow a social store on WhatsApp, Facebook, or Instagram. And today, Meesho has close to 500,000 monthly active social store owners earning income each month, connecting over 5 lakh transacting sellers with 199 million annual users. In a country where millions are just beginning to shop online, affordability is everything. Atre says that Meesho is laser-focused on value, not the convenience race of quick commerce. For emerging India, price matters more than speed, and that's what gives Meesho its edge beyond metros. So what gave Meesho its breakdown moment? It's the way it positioned itself, not premium, not branded, not metro-focused, but value-first, volume-driven, and small-town e-commerce platform. And let's break down how Meesho tapped into an audience ignored by premium e-commerce. India's next wave of shoppers aren't looking for big brands or flashy sales. They're looking for everyday essentials at the lowest possible price. These are families buying household items, clothing, kitchen tools, budget products where every rupee matters. And Meesho's bet is simple. Millions of Indians want affordable essentials, not the next day luxury, and that's the audience driving Meesho's explosive growth. Over the last few years, Meesho has expanded from a social selling platform into one of India's largest horizontal marketplaces with staggering order volumes and a fast improving financial profile. Here's where the rise really shows. In financial year 25, Meesho processed 1.8 billion orders that hit 29,988 crore rupees net merchandise value, 9,390 crore rupees operating revenue, up 20% year-on-year. and positive free cash flow of 351 crore rupees and improving contribution margins at 4.95% despite net losses from one-time items. If it succeeds, Meesho becomes India's first at-scale horizontal marketplace to list domestically. But what will Meesho actually do with all this IPO money? Let's understand. Meesho plans to channel its IPO proceeds into strengthening the backbone of its business. Investments in AI, data systems to personalize recommendation and detect fraud. Expansion of cloud and back-end infrastructure to support rising order volumes. A major boost for Valmo and logistics capabilities. Marketing push into new geographies. And potential acquisitions to deepen its presence across value categories. Meesho's impact isn't just economic, it's social. It brought millions of home entrepreneurs, women resellers and micro businesses online. It opened digital doors for regional manufacturers. And it reactivated India's small-town demand engine, a market long overlooked by premium platforms. But like any major disruptor, Meesho faces real challenges. High cash-on-delivery returns continue to squeeze margins. Low average order values mean that the company must rely on extreme operational efficiency. Reverse logistics remain expensive. Delivery consistency in far-flung areas is still a work in progress, and investors want a clear, time-bound path to profitability as Meesho enters public markets. On paper, Meesho looks like a powerful force in India's value economy, with affordable products, massive small-town adoption, and seller base built from home entrepreneurs to small manufacturers. But now comes the question only markets can answer. Can Meesho keep prices low, scale logistics, and reduce returns, and still deliver profits? Because if it can, the next wave of Indian e-commerce won't be written in metros. It'll be written in the millions of households joining the digital economy for the first time.